What's going on, all of my SoFi investors? It is that time of the night to get into a SoFi stock update, as well as talk about what happened in the markets today and what to expect going ahead into the future. We had our big catalyst today in the morning, CPI data, which obviously dictated how SoFi traded today. And we did move down about 4.66% in regular trading, down 0.43% here in after hours. So I want to go over that, as well as what else happened in the markets and why that did cause the markets to fall today, and go over the SoFi specific data that you need to know as an investor in SoFi. And on that note, you do not want to miss out on these updates, so hit that subscribe button. Only 12% of you guys are subscribed, so thank you guys that went ahead and did that and liked the video while you are at it. Also, if you want to get 3 free stocks for signing up with Moomoo, link down below in the description, and depositing $1, you will get 3 free stocks, as well as you will get 1 free share of NEO on top of that. I don't know where you can get a better deal than that. If you guys know, let me know down below in the comment section. But without any further ado, let's get into this video. So first and foremost, CPI data came out at 8:30 in the morning. And let's go over quickly why SoFi stock will trade around CPI data. Because the higher CPI comes in or the lower CPI comes in, that really dictates how investors are going to price in how many rate hikes we are going to see from the Federal Reserve this year and going ahead into the future. The higher CPI data comes in, the more rate hikes that are expected by investors. And SoFi is mainly a lending platform where you can get mortgages, you can refinance student loans, you can do all of these different things that revolve around lending. So what happens when rates go up through the roof? Lending tends to slow down. Then investors start to price in expected growth rates, expecting lower revenue for SoFi, because SoFi derives a lot of its business and a lot of its revenue from direct lending. So hopefully that made some sense to you guys. Now, what the actual numbers are that came out today was 7.9% inflation in February, as food and energy costs push prices to highest in more than 40 years. The key points state the consumer price index for February rose 7.9% from a year ago, the highest level since January 1982. Excluding food and energy, both of which moved sharply higher during the month, core inflation still rose 6.4%, in line with expectations, but the highest since August 1982. Gas, groceries, and shelter were the biggest contributors to the CPI gain. Auto prices eased. Worker paychecks fell further behind as inflation-adjusted earnings dropped 0.8% in February, contributing to a 2.6% decline over the past year. So we know there's going to be high inflation because of energy prices and food prices because of Russia invading Ukraine. But the fact that other things did not start to go down, or at least reflect a change to the downside, definitely caused a bit of fear in the markets today. But yet again, in line with expectations, that's why the markets did not completely just melt down. Now, on the other hand of this, you are seeing a lot of fears about the possible contagion due to the Russian economy. Let me explain. So it says JP Morgan is winding down its Russia operations amid widening business exodus over Ukraine war. JP Morgan said they had, in quotes, limited exposure to Russia, and also Goldman Sachs said they had $960 million of total exposure to Russia. So that's basically nothing compared to Goldman Sachs assets under management, and it's probably very little of JP Morgan's assets under management. But even though these banks don't have high direct exposure to Russia, if they have a lot of indirect exposure to Russia, that can also be a big problem. Direct exposure would be the banks directly holding assets from Russia, whether that's stocks or bonds or anything else. That's direct exposure. Indirect exposure would be, say, the banks are giving out loans to hedge funds or institutions that have a lot of exposure in Russia. So it's not direct exposure. They're not directly invested in Russia by and large, but hedge funds and institutions, they tend to have a decent amount of exposure to Russia. So the complications of what this fallout could be, I think, are starting to be a little bit more understood by market participants. Even indirect exposure would consist of, say, JP Morgan had loans out to Credit Suisse or Deutsche Bank that has a lot more direct exposure to Russia. That could turn out to be a big issue here in the next coming days and coming weeks, and a big reason why the markets might actually sell off, because these banks, they have a lot of indirect exposure to Russia. Even for an example, if JP Morgan or Goldman Sachs had investments with Citigroup, Deutsche Bank, or another European bank that does a lot more business with Russia, that it would not be a good thing, and you could get a bit of a credit crisis going on across the world because of it. Now, for the day, you can see that a lot of stocks were deep in the red, like Apple down 3%. That's almost unheard of. Amazon up 6.32%, also almost unheard of. So Amazon did actually carry the markets to a certain extent today. If Amazon was not up this much, the markets probably would have been down close to 3% like Apple was down. So this was not really the strongest or the weakest day around that we've had in a while. Does seem like it was a pretty weak day overall, though. Now, as far as the SoFi specific data that you need to know, SoFi's short interest of free float is 17.85%. Current shares that are sold short of 129.53 million. Cost to borrow max going up yet again at 8.27%, and the utilization is at 100%. So that's telling you that hedge funds and institutions that own SoFi are not willing to lend out their stock for 8.27%, which is a decent return. So if they're not willing to do that at all, then that does suggest to us that they obviously think the stock's going to go up more than 8% here in the short and mid term. Now, the days to cover is sitting at 3.05. We are not really prone for a short squeeze unless we do get some kind of catalyst, and if we do, that could be a pretty big short squeeze given the numbers that we are currently looking at. Even the sentiment day for February 28th that was released yesterday, so on February 28th, the short interest was 18.62%, with 119.15 million shares that are sold short. Relative to the volume that we are seeing on any given day, that's a substantial amount. That's over double the amount of volume that we have been regularly seeing on a daily basis, worth of just shares that are sold short. So pretty interesting right there. As far as the option flows, this is not a very bullish thing, but we had 5 orders today totaling $1.07 million, positive order value of 29%. One of the lower positive order value days that we have seen in a while, which it makes sense. The stock was down 5%, but the dollar amount here is not very large, only $1.07 million. But it does look like a lot of that artificial shorting via the options has actually been going on today. Now, as far as the max pain by tomorrow and next week, my daughter is just going crazy. She's making it very hard to film this video, so you guys are just gonna have to excuse her. I can't really do anything about that right now, but the max pain is $10 for this Friday. For next Friday, the max pain is $12 per share. And just again, if you guys are unfamiliar of what the max pain is, when you buy options, whether it's puts or calls, the market makers take about 90% of that back end, and about 83% of options expire worthless. And that's what market makers want them to do, is expire worthless. So if they can get the stock to, say, $10, like we said, the max pain by tomorrow, then they will see the max amount of gain for selling you these options, and $12 for next week. So I think that's something to pay attention to. We tend to stay around this max pain price, and that would indicate a move to the upside next week. And we're going to get into the technicals in just one second, but I do want to point out, I think tomorrow you will see some form of a bounce one way or the other, just because that's how we've been going. Is we'll see a green day, we'll see a red day, we'll see a red day, see a green day. It's pretty much back and forth like ping pong at this point. So I do think you will see a green day just based off of that. If we see a red day on Friday and we see a red day on Monday, that's a bad sign. Down Friday, down Monday, not good. If we do see a green day heading into tomorrow, that would be a really good sign, as you would see a lot more confidence buying and holding SoFi or any other stock for that matter over the weekend. And right now, this is not really a buy the dip market we are in. It's really a sell the rip kind of market. So we do need to get above $10 per share. We're sitting just under that at $9.41 per share. Definitely seeing a lot of demand under $10, but not enough to offset the amount of shorting activity that we are seeing. So thus we remain under $10 per share. Now the 20-day simple moving average is our level of resistance that, like I've called out in many videos, is starting to come down. So once we do see that rally, it will be easier to get above that 20-day moving average at $11.03. Then once we break out above that, we're gonna go back to $14 per share in my personal opinion, once money does flow back into a lot of these beaten down stocks. And $14 per share has really been that support level since we have started trading for as SoFi stock. So I think we're ultimately heading back to that. It's been pretty bearish, but be fearful when others are greedy and greedy when others are fearful, I think is a good quote and saying to use right now. A lot of people are fearful. This is the time to be greedy. The RSI is approaching severe oversold territory at 36.53, as well as that the MACD is pretty much neutral. Trading volume has remained about 50 million shares per day, which is very high. So you are seeing a lot of activity around SoFi, but unfortunately it's a lot of bearish activity. And if you believe in this company for the long term, I think right now is an excellent time to continue to buy more stock. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys have not already, and make sure to get yourself those free stocks with Webull, Moomoo, and Public. Thank you guys for watching, and I will see you in the next one.